Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is March 1st, 2019. Shout out to my man, Michael Cole, for this song request right here, brother. This is banging right here. Stiff Little Fingers, Johnny Was. Never heard this joint, but it is rocking, boy. I tell you that much. Thanks for the song request, bro. What's good, people? Happy Friday, and welcome to another episode. And as you can see on the screen, we've got a Snip Connect sticker in the Webbot room. Somebody dropped in there. That will forever be the funniest sticker for sure. Snip Connect, man. That guy JSnip4 is a freaking idiot. But today, guys, we are going to be looking at Binance Research Group doing some analysis on the whole JPM coin, and they've come to the conclusion that the JPM coin will most likely not be a direct competitor to Ripple's XRP. When I saw this, I was like, yep, I gotta cover this. We're gonna have to read this one and see what they're talking about here, because I'm pretty sure they're going for XRP. Maybe not this year, but definitely next year. By next year, I think XRP, and let's just say this, in the next 2 years, I see XRP being a very small player in this space, because, of course, if we've got JP Morgan Chase coming on board, guess who's going to follow? Bank of America, Wells, all the big banks are going to definitely follow in the shadows of JP Morgan and, you know, create their own settlement layer for transactions and such. But we'll read that article. I wanted to definitely cover that because it caught my eye. And then the second thing is another casualty from this bear market, people. Coinhive is shutting down. So we'll take a look at the details about this decision they made a couple of days ago. But before we kick off into the articles, let's go ahead and take a look at that market cap. We are currently at $131 billion. Bitcoin's dominance dropped a little bit. It's at 51.81%. Not much of a drop, but slow creep up a little bit here. Again, I can't make anything of this market right now because of the volatility. Just not enough volatility to make any clear, rational decision on which direction we're going. I have nothing for you guys today in regards to that. So let's go ahead and take a look at that first article out of Cointelegraph, and it's about that research group out of Binance. And it says here, JP Morgan coin unlikely to directly compete with Ripple's XRP for now, it says. So it says the research group arm of the top cryptocurrency exchange has published an analysis of JP Morgan Chase's newly announced stablecoin, arguing that the digital coin brings minimal direct competition to Ripple's XRP token in the near term. The study was published on March 1st by Binance Research Group. As Cointelegraph has reported, JP Morgan Chase announced the forthcoming launch of its new blockchain settlement offering in mid-February, a stablecoin dubbed the JPM coin, to be backed one-to-one by the bank's USD reserves. As Binance Research notes, the JPM coin pilot project will initially focus on settlement and value transfer between financial institutions and is to be issued on the private permissioned Quorum blockchain network, a fork of the public Ethereum blockchain. In terms of interbank settlement, JPM coin is also purportedly for now unlikely to directly compete with Ripple's XRP token, given the latter's ambition to serve as a multi-bank mediator currency between both fiat cryptocurrencies and any fiduciary product, as opposed to JPM coin's currently closed network solution. Taking stock of the bank's vast global client base and $2.6 trillion balance sheet, Binance Research suggests that the JPM coin could make the institution the largest stable coin issuer on the blockchain, measured by circulation supply and total market cap. Absolutely. That would dwarf the entire market cap of cryptocurrencies by a long shot. So, man, that is crazy. The coin, the study continues, is poised to become a potential precursor to the third generation of stablecoins, which will target the world of traditional finance and aim to serve particular purposes and business use cases by means of private blockchain-powered tokens. In the study's schema, the first generation was spearheaded by Tether USD, later followed by a steady stream of second-generation new stablecoins over the course of 2018. According to the study, while JPM coin may have significant material impact in improving the cost and time efficiency of traditional financial services, the study continues its implications for the public stablecoin market will in the short term be minimal. Large banks and financial institutions have a distinct set of advantages in issuing fiat collateralized stablecoins, but these offerings will not displace liquid publicly traded stablecoins in the near future, given the closed ecosystem built on private blockchains. Moreover, as a proprietary and centralized network, JPM coin is unlikely to be tapped by competitors in the banking sectors who may well release their own native crypto tokens in the future, the study contends. As reported, JP Morgan Chase CEO Jamie Dimon this week suggested that JPM coin could eventually find consumer use and evolve beyond internal use cases. Stablecoin innovation continues to gain global traction, with banking titans such as Japan's Mizuho Financial Group and Mitsubishi both set to launch their own yen-pegged tokens. Meanwhile, unconfirmed reports suggest that Facebook is also developing its own fiat collateralized crypto to be integrated into its messaging services. So again, I've told you guys this. Once I started to see in 2018, middle of 2018, I came to a new realization about this space. And I've said this in videos before. We have to start to understand how nothing stays constant. So however we thought, especially those who have been in the space for quite some time, like myself, we thought one way about blockchain, decentralized, public ledgers, all that stuff. We thought one way about how it would be implemented into the real world, into the masses. But you have to evolve your thoughts and always analyze things and reanalyze things. And what I've come to the conclusion is that the public blockchains will definitely serve a purpose. But what's going to happen is these private blockchains are actually going to have a larger slice of the total pie when we're talking about aggregate demand for blockchains and cryptocurrencies. So you're going to see a lot of private blockchains in 2019 and beyond really take a big share of the market. Do we include these private blockchains in the market cap of cryptocurrencies? I don't think so. I think you have to leave that out. And Bitcoin, in my opinion, will continue to move forward and move higher in value as a safe haven asset, as a digital version of gold, especially as the US dollar continues to erode. Bitcoin's not going anywhere, in my opinion. But again, as I've stated in yesterday's video, a lot of these projects that you guys love so much will probably not see the level of adoption you thought they would initially, just simply because of these big conglomerates, these big mega corporations. JPM coin, JP Morgan Chase implemented an iteration of the Ethereum blockchain. So because these blockchains are open source, anyone can take them and modify them to their liking and roll them out. Now, I will say this about, and I was talking to Steve Floyd about this yesterday at the EOS Pitch Fest. With EOS, you can have side chains like Telos. You got a whole bunch of side chains out there. You could have a corporation create their own side chain, but that side chain will still integrate and connect to the mainnet. It's going to be interesting, though. We're definitely going to see the proliferation of private blockchains in 2019 and beyond. And again, we know how the cabal works. They're not going to use something that will benefit the whole. So, of course, private blockchains are going to be the evolution for them to still hold power, but leverage the capabilities of blockchains. And people say, well, why would you have a private blockchain? Isn't a database better? A database is better, but you could have a private blockchain amongst other private entities. So if JP Morgan doesn't want to trust Bank of America, Wells Fargo, even the regional banks, whatever, they don't have to trust each other. They can have a trustless private blockchain where each bank runs their own node on this private blockchain and benefit and do whatever they need to do and achieve the efficiencies they need. So that's just my 2 Satoshis on that one. It really is about 5 Satoshis, so y'all better pay me for that. Let me know your thoughts about what Binance is saying here, that the JPM coin will not be a direct competitor to Ripple's XRP. I don't think it'll be a direct competitor right now either. But you better believe that that's the end goal, is to make this thing open up in some form or fashion to the public sector, where they can have them participate in it. Not saying it would be a public blockchain, but allow public parties to participate on the private blockchain. So again, let me know your thoughts, guys, and we'll have that discussion in the comments below. Second article, man, Coinhive says it's no longer economically viable and shuts down. So perhaps the most apparent, it says, after effect of the crypto crash of 2018 was the near immediate decline in the mining sector. As the price of Bitcoin and other cryptos fell hard, giants of the mining business like Gigawatt were forced to close shop. While there is a little more stability within the market, mining is still taking a hit. Coinhive is just the latest to fall victim to this, as the firm formally announced that they would be closing operations. In their announcement, they made it clear that from March 8th, 2019, their service will be discontinued due to not being economically viable anymore. The firm explained that the hash rate dropped 50% after the last Monero hard fork took place, which affected their bottom line. On top of this, the crash of 2018 drove the value of XRM down by 85%. Once the next hard fork for Monero was announced for March 9th, 2019, the firm realized that they would not be able to carry. However, for customers who still have funds with the company, some level of withdrawals will still be possible after that date. Your dashboards, they say, will still be accessible until April 30th of 2019, so you will be able to initiate your payouts if your balance is above the minimum payout threshold. Up until now, Coinhive has functioned as a JavaScript-based digital currency mining service. It works by making use of the computing power of a browser once installed on a user's computer. While every aspect of the blockchain and community was walloped by the market crash, the mining industry was affected on all counts. With the crash, the mining of currency has become unprofitable, and thus the demand for mining services has practically disappeared overnight, with Coinhive being the latest firm to close down. So man, I took a big hit on mining contracts that I had invested in 2018. I invested a lot of money and they're just done. So I understand. I took hits before with the mining game. When I first got into cryptos, I made good money in 2013, reinvested that money into mining and started mining Litecoin. That was the first coin I started mining. And back then, Litecoin was 35 cents, somewhere around there. Good times, man. I'm telling you, good times. But just like now, just like everything, you have ebbs and flows. And so when we had the crash of 14 going into 15 and it was just like flat line, couldn't make much money. I couldn't make money with the investment that I had. So I made most of my money back then, but you know, now they're just wasted paperweights. You know what I'm saying? So actually, matter of fact, let me get you guys, I'm gonna show you guys right now one of my mining rigs that I still have. It's just a huge ass paperweight. 1 second. So as you can see here, this thing is heavy as hell too. I had a few of these Gall miners. I don't know if you guys, shout out to everybody old school, remember Gall miners. This thing, I don't even remember how many hash, what the hash rate on this thing was, but it was a script ASIC machine. Of course, it's red, right? Quite naturally. And man, this thing used to get busy, people. This thing is heavy. I'm sure the ones nowadays are are definitely way smaller than these are, but Just wanted to show you guys that. So that's pretty much it though, people. Have you guys been affected by this bear market from a mining perspective? Are you guys still mining? How's that going for you? I haven't, like I said, I was mining through some contracts, some cloud contracts, but that's about it. I didn't want to get my hands dirty. Had enough of that back in 2013-14. Let me know your thoughts though again, guys. And again, shout out to my man Michael Cole for that song request. Stiff Little Fingers, Johnny Was. And that's my 2 Satoshis for March 1st, 2019. Make sure you guys like, share, and subscribe too. I always forget to say that. I'm out of here, boy. Holla!